High prices cooled off in July. The Consumer Price Index, better known as CPI, which gauges inflation, came in at 8.5% versus the 8.7% economists predicted. Let's get Wall Street's reaction with Joe Tigay of Equity Armor Investments. Joe, this certainly has to be happy news.
Yeah, the initial reaction was very positive for equities, leading, of course, by tech. Interest rates coming a little bit lower as the expectations for a 75 basis point hike in September have cooled off too. This came in close to 70% expectations for that 75 basis point hike. After that inflation number, it's now under 50%, close to 40% chance for a 75 basis point hike. So a little bit less of a reaction for the Fed, less they need to do as this inflation is coming down, and equities like that.
What signals are you watching for a breakout or breakdown in the stock market?
One thing I'm watching very closely, Angie, is in the S&P 500, a 50% retracement from the low to high. Now, in bear markets, every time that 50% retracement has been breached, the market continued higher and did not make a new low after that point. So right now, that level is 42.27 in the S&P 500. Only about 1.5% away to the upside. So if we break that, that's probably good news for the bulls. Now, that said, there's lots of potential dangers out there for the market. Yes, I know there was good inflation data, but there's a lot of mixed signals still in the economy. So there's still potential for that market to go down and retest the lows that we saw earlier this year.
Thank you very much, Joe.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.